Hi, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation. Well, last week when I signed off, I warned you that this was going to be an exciting week, and it certainly has been. Even steady Eddie Amazon has had its moments, like today's little sell-off. Facebook has been attacked by one of its founders for various nefarious activities. But even that stock has managed to close flat today. Alphabet has surprised with great numbers, and Netflix got pounded before turning around somewhat. So let's see what did happen and where we are going in the weeks ahead. Okay, well, as usual, let's start off with Amazon. Amazon had some very, very nice numbers. The revenue numbers were, as usual, very strong. Their earnings numbers were, a little down, but to some extent, Amazon's earnings numbers are, I think, almost more or less what they would like them to be, and can be fairly erratic. But the point is that the growth of this company continues apace, and the stock price has held in nicely. We, of course, continue to like this one as a buy and a hold. Turning to Facebook, well, Facebook sort of suffered a bit of a body blow this morning when one of its founders suggested all kinds of nefarious activities of the company, and the stock price took a plunge. But guess what? The point here is that the growth of this company continues apace, and after that little blip, the stock price has actually closed pretty much unchanged. Nvidia, which you will recall we showed you as having bottomed out precisely at its bubble price. That's 7.4 times book value, and a very, very critical level in the mathematics of SVA. Had a nice bounce, went all the way up almost to its HB2, which is 12 times its book value. And that's where we actually recommended a sell on the stock and therefore avoided this big downswing. However, with the upswing in Bitcoin, the stock has turned around and recovered back up to its HB1. That's 10 times book value, set back a bit, tested it, and is now broken out and retested that HB1 level. So technically, it's been a nice turnaround, and given all of that, we are very much inclined now to be buying the stock in anticipation that possibly we will get a move to the HB2 price. Again, that's 12 times book value, or about $214. Netflix, well, we've been warning about Netflix for some while. We had an avoid on this stock for a long time because we could see that its internal growth was slowing down, and that in point of fact that it was losing some of its programming to other companies such as Disney, who wanted to have their own competing service. When they came out with earnings, that stock just plunged and continued on early into this week as well. We had thought perhaps that there might be a good possibility that we might move all the way down to the HB3. That is 16 times book value. The stock has actually, on general strength in the market and the other FANGs, has turned around and has moved back up to its HB4 and is a little bit above that right now. We're going to be monitoring the stock very closely to see whether it can actually hold here, or whether the weakening fundamentals of the company, which crushed the stock initially, may not continue to keep pushing the shares down. That HB4 price is now critical in our thinking about this company. Of course, when we look at the fair market value potential, which is minus 75%, we have to say this is certainly not what we would call an investment grade kind of stock. So we are very wary of Netflix going forward. Apple, not much we can say about Apple. When the stock had recovered back up to its fair market value, we essentially said, I think we're just going to sell and avoid this stock. And that very, very much remains our stance on this on this company. We don't really see it taking off and going anywhere. It's trading somewhat above its fair market value, which has been the high for the past 10 years, just to remind you of last week's program. So we don't see that the investing value in this stock at all. Alphabet surprised everybody, I think, by stunningly strong numbers, and the stock leapt by something like 20% today. I believe 10.45% today. Yes. And the question is, now what? Do we chase the stock? We had had a sort of a, who cares, avoid this company, expecting that it might pull back to the super growth price. Again, that's 3.5 times book value and a very, very powerful support level in the mathematics of SVA. That has not turned out to be the case, and the stock has jumped again. In fact, you can actually see that the stock has actually kind of closed that gap now that it had when it initially broke down. However, with a potential peak, I think, of about $1,309, we are not inclined to chase the stocks. You win some, you lose some. You can't date all the girls, and this is one that we are not going to have anything to do with for now. Now, that was the summary of the FANG stocks, but last week, remember, we included one additional stock, which was Microsoft. And Microsoft, again, they had very, very nice numbers. The stock, however, for the past year has been having a devil of a time trying to get above its HB1 price. That's 10 times its book value. And of course, the fair market value is, well, that's 40% below that target level. The stock looks and acts like it wants to break out, and indeed has been fairly strong today, moving up to the 142, 143 level. In a sense, this stock is almost a kind of a flip of the coin. Will he, won't he, or will she, won't she, depending on how you refer to stocks. Is this thing going to break out? Is it not? Given the momentum behind it, I think that we would be inclined to buy the stock here. However, we would be watching the HB1 price very closely for a failure to hold. It's quite possible that given that momentum, we could see it moving all the way up to the HB2 price. That would be 12 times its book value, and $177 would be about a 28% gain from here. So we wouldn't want to miss that, given what appears to be a positive technical signal. However, we'll have to wait and see.
Okay, to recap, Amazon and Facebook stay in the portfolio as hold buys, joined by Nvidia, which is now broken out and been confirmed. Essentially, our own FANG portfolio will consist of Amazon, Facebook, and Nvidia in equal amounts. We will review the performance next week and see how things have been going. Apple is still in a void, and Netflix is a wait and see to see if this recovery is real. We are not going to chase Alphabet as it is too close to the next resistance level for comfort. Finally, while not a FANG stock, Microsoft may be actually breaking out, and it may well be prudent to buy some, keeping that HB1, that's 10 times book value, price support level firmly in mind. Let me finish with one overarching consideration. None of these stocks represent value in any meaningful sense. All are in various states of speculation. However, if your goal is to equal or exceed the popular averages in a rising market, you must own at least some of them. If, however, there is a market setback of some dimension, every one will underperform the key averages, as happened last year. We are joining with you in a game of Russian roulette to select those pistol chambers that do not contain a bubble or a bullet, which will blow the head off your portfolio. We helped you to miss that nasty plunge in Netflix, although the shares may now have bottomed for a rebound. In the short term, I suppose, that sort of balanced, as it were, the jump in Alphabet this week. SVA has kept you nicely ahead of the FANG game, and I hope that you are enjoying this analytical approach. Keep in mind that our SVA service can be used to help you to beat any index. Visit strategicanalysis.ca for more information if you're interested. This is Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you have the right tools. See you next week.